Hello guys, glad to have you on board again. Today heading for that new trading week. Probably the most important of the January's month. We're gonna have a quick look at the monthly actual charts on the Ethereum. So first, as usual, we're gonna clear up the cryptocurrencies and then we're gonna move to other asset classes. There's a lot to talk about today. I'm gonna try making it as quick as possible, but as I said, there is a lot to talk about. So anyway, in a monthly basis, we're still having a positive bias in terms of momentum. It's been 2 months in a row that we're trying to reinstall bullish momentum, but the problem is we're into oversold territory as well, which gives kind of a sideways action in here and not a clear bias to trade in the monthly chart basis, which means all we can care of in here is the few informations we have, meaning that we're basically trying to install some kind of a morning star pattern in here, still pending at that stage because we obviously need to close January to get the reliable trading information. I still tend to believe that we're trying to build a support because the underlying psychology still confirms this to me, even though I require some kind of a price confirmation, and that morning star pattern could be one of those confirmation I'm seeking. Would be basically to take that candle and close it right here on top of these doji's highs levels, and as high as we can be, and that will be a good sign that the market build a monthly support out of the 100 price, $100 area. In a weekly chart perspective, same thing goes in here as well. During the weekend, and at least on Friday, I gave you guys final updates heading into that weekend that we were having two most likely options heading in that weekend. Option number one was to make an harami pattern and holding those lows and breaking high to invalidate the bearish candle. Option number two was to basically do the exact opposite, breaking through this, building a more doji candle to try building the bullish sentiment on the week ahead. The market decided option number two, even though, and I stand for what I said back in the when was that? I think it was Saturday morning. Yes, 11 on my local time scale. And what I had in here, so yes, kind of a positive signal. We were oversold with a stop hunting pattern, and the market just broke through this instantly. And I thought it was kind of a bullish release out of that triangle, because we weren't just breaking a random level. We also had a clear, visible technical level broken through. So the market could have just gone bullish in here and triggered the harami testing, trying to get in here, searching for resistant context, and trying to close the week in here, or at least above that. Could have been, at least at that stage, regarding the technical information I had, I would have clearly shifted the balance to the positive side. And obviously this is the reason why I've been sharing my sentiments in Twitter and Telegram about that. Not saying that this was actual confirmation. I was clear that we needed to reach out to the context in order to do that. The market just failed it. It just trapped some bulls, some stupid guys who once again got in here, got themselves leveraged with a stop loss below the closest low, and they just got fucked up as usual. To be honest, I really told you guys that anything in here has to remain with a large stop loss just to avoid being caught in some kind of stupid market making like that. So it's been happening. We try to go out of that triangle. We did by the upside. To the downside, we just fucked everything and everyone in here. Just this market may need some catalyst to get the fuck out of here. All I can tell is that now that we have that doji's candle on the weekly chart, we still have decent odds for the bull side, but it still requires validation. So as long as we're not reaching out to the bearish context, doesn't mean we have that. It means we have no confirmation of that bullish bias, and the fact that the market wants to reverse. We need to have this really confirmed by getting out of this range and by breaking through the bearish 1 hour context. In a technical perspective, the 1 hour chart really is the one that is shaping the price structure. And so far, it still suggests we're ranging, and we're just remember what I said, we were looking at a 5-wave structure, okay? So we clearly made wave 1, 2, 3 extended wave. Now that the structure is mature, we can clearly assess this. Back then we were clearly unable to say if this was the wave 4 with a triangle and to build an extended wave 5. So back in here, I had no regret buying those signals because we generally don't know. Remember that Elliott is pretty easy to forecast. It's pretty easy to back plot, and it's a lot harder to plot in real time. So right now we know that probably wave 5 is in here, just because if wave 5 couldn't be there, as we managed our way lower than that. So this is the reason why we built that triangle, to basically save us some time, lower the trend channel, and allow us to go lower. But I think right now this is clearly a wave 5 topology, which means we're probably out of bearish potential, and all we have is a bullish potential, but it's just a matter of time. You don't do timing, which means you don't know when the market will manage its way up. But I still have a fine shifting balance to the upside, but I'm waiting for those freaking price confirmation, us to lead the way, getting into context, fucking it up to the upside, and trending. In order to trend, we need, remember, to get there. All right, we need to get into context, probably going to have a little bit of a sideways action, and we need to break through this, and we need to have unfolded boxes. We're going to have something like that, but I want this to happen and the market to keep on pushing forward. Okay, that's what we want. We want the market to try ranging and trending. This is where the bears should play. And as I said, I think absolutely few bears will show up in here. It's most likely bulls who will secure the gains partially in here, so partial profit taking, who will probably slow down the pace just a bit. But I see very few potential for resistance in here. For those who want to manage the risk, you know you will have to do this in that price area. Aside from cryptocurrencies, let's move to other markets. We're going to clear up forex first and keep the best for the end. We're going to talk about the SPX, but we're going to do this one last one, because we're going to get to the actual conclusion before really understanding what's going to be probable or improbable when it comes to the stock market. We have to assess the entire other asset classes, because it's all linked some way, but in a very complex manner. So first of all, we start with the forex market. As I said, I think we might be on the week ahead searching for some kind of support in the yen, so might be some risk back in that game. But do you actually buy something like that? 1 hour chart time frame doesn't really give me any odds to trade, so I would say more like a 2 hour chart in here seems to be more reliable. I'm looking at a wave 4 kind of pullback, so I'm waiting for something like that. Clearly was wave 1 in here, wave 2 pullback, big wave 3, we're unfolding the boxes, so we're trending in here. So we're looking at a 4-wave pullback. Generally, we're looking at Fibonacci retracements. So we had 23.6 in here, we got tested first time, fucked up, and now we're trading 38.2. So starting now, I think any bullish signal is tradable. So I'm just waiting for something to happen in the yen, but I think reinvesting previous gains in the yen is the scenario for the week we have ahead on top of us. So it's hard to say buying right now, but we're clearly trading below context. We had a taking profit structure, and we're exceeding below that. What we have right now is an God damn it, overload context, which means you can trade those signals only if you have a horizontal price validation. And I would say we're purely trading 38% Fibonacci level, which kind of makes sense. We're looking at a horizontal price validation. We clearly have something to trade in here. So that's the kind of signal you can trade, but it's a little bit aggressive. So I would say if you're getting yourselves in here, okay, technically, the strategy says yes, you clearly have a wave 4 pullback kind of context in here to trade. You're clearly in the expected price area to do so. But the thing is that it needs a large stop loss. I would say stop loss should be set in here to be really, really sure that you're not going to be caught up in a strong bearish reversal. So I would say easy in here is where you put your invalidation levels, so you stop loss at the market. If we go there, really something is wrong. But we normally should buy ourselves out of that wave 4 and heading for wave 5 right into the context. So what we may expect starting from here is either going slightly lower, testing the next level, 90.5, and getting into wave 5 profit take, get the fuck out, let the market consolidate for a bit before catching up on this one later for some further gains. But I think right now this is what we may expect. Wave 5 extension, breaking wave 3, reaching out to context once again. So yen, I'm going to get into this. I took the CAD yen last week. I said I'm going to be selling a 2-hour chart signal as we were trying to overcome context. We exactly tried, overbought, reversed, below Fibonacci retracement, everything you need to sell in applying the strategy. So I'm bearish on this one. Slowly bearish as the stop loss is pretty damn far from now, as I've been setting my stop losses in here. As for now, I need a price validation to lower the stop loss, get into further reinforcements and things like that. So in terms of money management, getting in here and risking 2.5%, which means I'm low leveraged for now. I'm waiting for AUDNZD yen to be selling this one again, but I still have hard time figuring this one out. So I'm kind of waiting to see if this one breaks down supports, and in that perspective, I'll be setting my stop losses in here because I can. We're got a stop hunting pattern, which means if this one breaks down supports and triggers some kind of breakdown trades, I could really well set my stop loss in here, but that will be a breakdown trade. So it's basically I'm going to wait for candle closes below that level, putting a stop loss in here, securing the trade on support. So basically the usual breakout signal. I mean, you take the breakdown, you put the stop loss on top of the highest close, so it will be a stop loss at the market. When you get to trade breakouts, you put the stop loss at break even. You put the stop loss in the order book. You're not putting invalidation level. Breakouts are high level of risk, so if the market reverses, you want to get the fuck out, and the market shouldn't reverse after a breakout. Okay? When you're speculating, you get large stop losses because you don't know. When you're trading breakdowns, generally you should consider this as being a trending kind of market. And in that perspective, this will be wave 1, wave 2, and we're looking at wave 3. Wave 3 shouldn't be unfolding. Wave 3 should be keep falling apart and breaking down support. So you sell, you profit take, number 1, at a 1-to-1 risk-reward ratio, and you're paying for the stop loss. All right? Now basically the way I'll be doing. Okay, getting in here, putting a stop loss, paying for the stop loss in here, so 50% profit taking, and let it go with the rest of that trade with a free trade. Okay, and in that perspective, you just let it go. The stop loss is paid. You just keep on going to the bear side, and then you manage your risk out of the context channel and the usual thing you do. If you're looking at a wave 4 pullback in here, which we do, it's wave 1, 2, 3, 4. We're looking at a wave 5 that normally has to slip through wave 4. As this was kind of unexpected, we may just expect to slip below the candle closes. So I would say in here and below is the prices you want to start getting out. Okay, so this will be kind of a target number 2 area, and I would say target number 3, an extension of the context, which is a maximum profit taking. If we go there, you get the fuck out of here and you profit take. But I expect the yen to be strengthening in the next few days, which means first problems ahead for the indices. So now we get to the second piece of the puzzle. The risk taking could be jeopardized with the yen. We're going to talk slowly about the AUDNZD. So AUDNZD is fine, and we're trying to trigger a trend trade. We'll see how this one goes. We're 2-hour chart, no signals, but we're trying to extend through context. We'll see how this one goes. I'd like to see the market just fucking it up and go straight line. If it doesn't, and if it pullbacks once again, remember that we're early trending. So early trends means high level of retracements and going sideways, ups and down. But normally we should stick to the lows and try to slowly but steadily and bite by bite grinding through highs. So for now, this is exactly what we're doing. So this is really confirming what I think and how I feel about that market. We're early trending, so we're building ourselves the momentum to break through resistance strongly. But is it already mature to do so? I really don't know. So it's still too dangerous to go fully leveraged without stop loss and putting stop losses and things like that. I think right now stop losses must be set far from the current prices, because this is an exotic pair, could very well fuck you up with some lower shadow candles like that, and you don't want to be caught in such kind of things. So moderate exposition to those markets, even though leverage is obviously possible in here, but low leverage because of the level of uncertainty that remains kind of balanced. So as I said, now gold and silver, these ones are really interesting. I think the gold is heading towards support area, interesting support area, 2-hour chart time frame as well. Probably something is about to be done in a weekly chart perspective. We have that signal as well requiring horizontal validation that we didn't have in here. No horizontal thing in here, or basically probably just one, but I would say too aggressive as we have it 23.6% below or fits. So I would say just let it go one more time, and if that signal is triggering once again, but after testing that support, I would say that's a valid thing. As you can see, I've been setting myself an alert down there, which means I want the price to be tested first, and if it triggers a signal, I'll be ready to buy, but I first want to see that Fibonacci tested. But we're obviously trading into context, which is interesting, and I think this is clear a wave 4 kind of pullback that we're having in there. So in that perspective, I would say that wave 4 consolidation doesn't necessarily is enough to me just right now. We're expecting kind of this kind of consolidation, this long of a consolidation. So take the timing out of the top to build and find the bottom. You can say that we're obviously having the same amount of time right now, so could be enough for a consolidation, but I first want to make sure that we hold on to this support and we're just not trying to fuck it up to go there, which is also a possibility. And of course, if you buy there, your stop loss shouldn't be set in here. You really need to set a stop loss in there, so stop loss must be far, and of course, if we go there, we'll have a much better risk-reward ratio. So I don't know, this signal is really not enough to get me into that trade. I still have gold, which means I don't necessarily need to jump in aggressively. I already have my previous trades running on, so all I'm looking out for my trades in here is for a tiny reinforcement. I've been partially profit taken in there, waiting for the range to build up. So I'm exactly just going to do that, wait for the actual pricing of that range to terminate. When I have decent odds that this range is over, I'm going to obviously put the money back in the market to head for the higher expectations and the next Fibonacci targets, which are in here, 1324. Okay, so still same thing in here. Gold might be somehow attractive this week, probably just a few dollars lower, but we may expect gold to rebound out of the bottom of that range structure that we're currently trying to build. It's just that we have some Fibonacci who is attracting like a magnet, and I just want to make sure that this magnet is not going to fall apart, because if it is, then obviously I'm ready to buy in here, eyes closed, but I just don't have enough information to just buy in here. Euro bonds, so the bond market, kind of consolidating as expected. We're kind of building somehow a triangle, or whatever the shit this is, I don't know. All I know is that we're building ourselves a resistance on the higher time frames, and at some point, now that the ECB isn't working its way in, I think I'm just waiting for the damn support to break down. Whenever it will, as you can see, we've got a stop hunting pattern aside from context, on excess throughout beyond context. This is clearly the best case scenario for a trend reversal, which means we go there, we try to range, but this time we trend. Okay, it's exactly as we've done in here, strong reversal, and we try to trend, but it doesn't work out the opposite way neither. So we're failing here. We're probably going to reverse and try trending at some point, and I think we got decent odds to trend bearish on this one. But obviously this one is a higher time frame kind of trade, kind of a weekly trade to get the fuck up into the weekly context, which is getting below 154 on the BUND pricings. So I expect as well some bearishness in the bond market, but believe me, if you're thinking that bond market bearish means means bullish stocks, then you just got it all wrong, because that pattern and that kind of correlation is really going sideways, and not to say it, I think it's about to reverse. So I strongly think that the bearish bond market is going to be bearish for stocks as well. And in that perspective, I think it's just all lining up for another drop in the stock market. It's hard to say, but all I'm saying is that I see early signals of this. The market building itself for a massive sell and another sell-off, even though everybody thinks we're bullish. We're still trading below resistances, and to be honest, that was last week's. On Saturday, I made you guys an update right here in TradingView, and talking to you about the bullish bias and the strong problems that the guys who are having that bias might be facing in the next few weeks and months, simply because this bullish bias is going to force them taking bad decision. Just as a bearish bias will make you suffer pain trades on the bullish trend, I think just right now we're bearish trending. Everybody's just trying to ignore it, hiding themselves before ranging or uncertain situations, undecisive market, undecided market, or whatever this is. I think at some point I just have to my job is to make decisions and to stand for them and to trade them. Obviously, an analyst doesn't give a shit about trading. He's just there to sell some paper, and he's just trying to be as all right, let's put it in that perspective, because I think this is really, really the center of the maze that we're touching in here. What's the difference between a trader and an analyst? I think the trader just trying to get to make as much gain as possible. So when do you make gain? You make gain when you're right. How do you take losses when you're wrong? So some traders will try to be as right as they can and as less and trying as much as they can to handle being wrong fewer times. Some other traders like me doesn't give a shit about how many times they're going to be wrong, because they lose a bit to gain a lot. And in that perspective, all I care is just to be right at some point, even if that means being a few times wrong in between. So that's my perspective. What's the difference for an analyst? An analyst doesn't really give a shit about trading, because that's not what pays him. The paycheck is basically he has to put some paper out there and just trying to be as right as possible. So what the analyst has as a perspective is far different from mine. I'm just trying to make money, where an analyst is just trying to be as right as it can. And it's not even that, because the analyst isn't even trying to be right. He's just trying not to be wrong, which is the worst case scenario. If you're following an analyst, you're probably just going to be as wrong as you can, because those guys are just trying not to be wrong, which means anytime they fail, they're going to fail hard, and generally they're going to tell you to buy under resistance, or tell you that the market is bullish as the market is bearish. That's just, don't follow analysts. It's the worst. It's the worst you should do if you're a trader. If you're a trader, you follow traders. You don't follow analysts. So if you're learning trading, forget about damn analysts. They're not here to teach you how to trade. They're here to sell some paper, because that's what they make. That's how they make money out of, by just building papers. Doesn't mean the paper has no quality. It's just this paper is for other analysts to read, not for traders. Because if you do read that, you're generally going to be wrong, because they're going to tell you, okay, the market is rebounding, the market is strong. They're going to say that when we made 80% of the underlying profit. So you're going to buy the end of a trend, and you're generally going to be wrong-footed, because you're going to buy when others are profit taking, which is the worst fucking case scenario. So always be one step ahead at least, or just try what's happening right now, not what has happened, which is exactly what the analyst will tell. They will just talk to you about what just happened, which is nonsense. You need to be one step ahead, not one step below, after everyone. Otherwise, you're obviously someone else's bitch, and you don't want to be. All right, so that aside, all right, I think anyway in here we're below resistance. Everything suggests we're going to fuck this up on a weekly basis, but we're just waiting for the weekly bearish engulfing structure. So I'm waiting for this market to really give me strong signal that the bears are in control. For now, we don't have that, so we're kind of building ourselves to save some time. So risk manage, make sure you put decent stop losses. I suggest stop losses should be set there. We shouldn't break those highs. So if we go there, invalidation to me, but I don't really think we're nearly going to be doing this. I'm just thinking we're waiting ourselves in here for the next step to start triggering, and that means strong bearish engulfing, and everybody thinking, oh shit, now this is bearish. And obviously when you're going to hear that the bonds are bearish, will be nice gains and partially profit taking when the stupid guys will start getting in and be our opponents. That's simple as that. So don't be one step late, try to be at least one step ahead, or trading breakdowns or breakup. I have nothing to say about breakout traders. You know what I feel about that. I think it's really for dusty kind of games, because you basically take really grains of salt in a big sea when you do breakout trades. But yeah, some people still tend to live out of this, but they're really rare. A lot of them are just bullshitters and signal sellers who most likely make money after selling signals more than trading. But that's one another big topic about the scammers we have out there in trying to teach you trading. But anyway, stock market now, heading into the big question: what the fuck do we do out of this? So weekly candles at the highs in a bearish market and below resistance. What the fuck do we do about that? We're trying to have sideways analysis. So I suggest, first thing first, as prices doesn't really give you informations, you're going to try answering questions with additional information. In that perspective, instead of forecasting whatever you think and doing gut trading, I think you relate on the technical informations. That's always going to be better than any gut trading that you might have if you're inexperienced. So what are the technical informations we have out there? You just apply the damn strategy. What do you see? This is clearly wave 3. We've been in falling boxes, clearly trending. That's good. Long trend, good trend. Wave 4 pullback definitely is a context in here. And wave 5. And what the fuck's been happening with that wave 5? Because we should have sold in here, and this happened. I mean, fuck it. Look at the unfolded boxes. It suggests just one thing. This is an extended trend. It is an excessive market. This is typically bubble trading. So we've been bubble trading the assets, the stock assets. So now everybody is trying to think that this is bullish because it's been bubblish. That's simple as that. So the problem with the bubbles is that we have the strongest ever possible level of bullishness and bullish biases. For what reason? Because the market has been irrationally bullish and people tend to follow what they lived through. So we've got both guys who've been trading for 8 years and they basically traded more bullish than bearish. So yes, they still have the the shaded, no, that's not the word. Anyway, I don't find my words in here, but yes, we have the shades of that bullish sentiment. We're still living out there, which means you've been used to buy, so you're still having those same biases, long-term biases of the fact that you need to buy more than you sell in the stock market, which is absolutely true. But you don't do that when the market reverses bearish, otherwise you're going to suffer. So obviously having a bullish bias is definitely better than a bearish bias, for the reason I told you in that video, because you're going to be not suffering 4 or 5 times, which obviously with a bearish bias you're going to suffer 4 to 5 times and be true 1 of 5th, which is the worst case scenario, and we don't give a shit about that. What we're trying is to be right 5 times out of 5. So how do you do that? You adapt to the context. When the market is bullish, you're having a bullish bias. When the market is ranging, you have no bias. When the market is bearish, you're having a bearish bias, pure and simple. What's the difference? Bullish bias means you're trading out of support areas and you take profit ahead of resistant areas. And you do the exact fucking opposite with a bearish bias. You're trading at resistance level and you're targeting bearish breakdown of supports in which you're going to profit take. So just reverse the damn strategy. It's freaking simple as that. Look at the freaking motherfucking exit signal we had on the SPX in here, totally suggesting the excessive pricings were overdue in here. We're now switching instantly bearish. For what fucking reason? I told you there are just one context that allows the market to go bullish to bearish. When we do fucking bubbles. What did I just got to conclusion earlier? We are clearly trading bubbles. Is that bubble as strong as it was on Bitcoins? Obviously not. Can you compare this to what we've lived through in SPX? Obviously not. This is even more than a bubble. This is the fuckingest, craziest speculative bubble ever that we've had into cryptocurrencies. We've been multiplying prices by 20. Do you really think that we're going to multiply stock assets by 20? Obviously not. So it's not comparable. But this is freaking bubble trending. This is not trending. You should never see things like that happening in a market, any market. This is just showing you that we have irrational pricing. Irrational means when it reverses, it's gonna be freaking brutal. So don't be stupid thinking that we're gonna range in here. We're gonna bearish range at best or bearish instantly. That's just like that because what we had is overextended, and when we overextend on one way, we generally overextend the opposite way, and generally the reversal is an instant switch. So reason why being bullish is already a mistake. Being bearish bias could be a mistake, but at least if you have to choose one of the two fucking biases, the only choice is either you say, okay, I'm still balanced, so I take no bias at all, or you take the bearish bias. But the bullish bias, any fucking way, is just the worst choice you should make. So stop looking at support price reaction. We're fucking up every support right now. So fucking support, it's a check. Surely we do. Are we going to fuck resistances as well, meaning no bearish bias as well? That's possible. So how do you manage your trading out of that conclusion? You sell more than you buy with more aggressive selling entries, but you don't do that blindly. You don't assess the market to be fully bearish. You just assess it might be and manage the risk for this to be just ranging. So where do you put the fucking stop losses? You put the fucking stop losses on top of major resistances, not just on top of the short-term resistance. So my invalidation level clearly are there, because if we go there, really means we're not bearish at all. And I don't think we're nearly going to go there. So weekly basis, even though we had a bullish candle close, if we're bearish markets, we're going to sell this fuck out because we're under resistance, and a lot of signals suggest we've been trapping a lot of bulls in here, and they're probably going to sell just right now. What leads me to believe that? First, we've got this. It's telling you just one thing, that the range is polarized, that we have poles, and that those poles were nearly and very likely going to push us to the downside. So the range is already a bearish range because we have that on the weekly chart, all right? So odds are to the downside in the weekly chart from a technical perspective. Second thing, we've been building stop pattern in here on support areas. If that market was bullish, we would have bought this fuck out and not breaking through this with multiple candle closures. So the market, yes, bullish, no, not possible. We're not bullish. Bearish, yes, possible. Neutral, yes, possible. Any other answer, not possible. So everybody who is saying the market is bullish, you can just delete them from your news flow. These guys are just probably bullshitters, or really they don't get it about the market. Odds for us to go making new highs, to me, less than 5%. So obviously I'm trading bearish because I think we got far better odds to be selling that market than buying it. For the reasons that we had lots of buyers buying at stupid prices, and they're going to ask to get the fuck out simply because we have some new targets to highlight right now, and we're heading there in the long run. So if you want to buy, don't buy that shit. You can support prices out of Fibonacci levels just like in here. I've been buying the stock market itself in here as well, because we are trading at Fibonacci supports, and the long-term trend, the monthly fucking trend, will remain bullish, which means these are support areas. We're going to buy in here. I'm obviously going to buy in here as well, and I'm going to buy in there also. The thing is that I'm going to buy whenever we'll get there. This one, I think we tested this one. I don't nearly think it's going to work. I think we're going to fuck it up pretty soon, heading to the next level, which I'll obviously buy as well. So you know what the next price I'm going to buy on the SPX is. It's exactly that price. We go there, I'm buying eyes closed. Anything in between, fucking bearish, and I just need to manage my risk. And why do you think I'm going to be selling in here? First of all, that's my plan. I told you anytime I retrace to entry price of 2018, I'll try to sell. So we're here. What the fuck do you think I'm doing? I'm selling because that was my plan. I'm not changing anything because we had a bullish close on the weekly. The weekly candle, to me, the monthly is basically going to switch bearish, and the yearly as well. So in that perspective, I'm just looking at selling that market. Look at the yearly momentum. We're bearish trading on momentum. So do you really think we're not going to break supports? I think we will. The monthly chart hasn't reversed yet, but same thing goes in here. We got a bearish momentum. We've been breaking through lows, and we're probably going to fuck it up as once again. So let's wait for this to play its game, but I strongly tend to believe that it's not yet switched bearish on the monthly chart, neither on the weekly chart, but we're probably going to do this pretty soon because odds are to the bearish side on the weekly chart, suggesting we're probably going to fuck up some other supports sooner or later. The momentum is still pretty fucking bearish. I mean, we're still minus 20 on the momentum, so if you think this is bullish, then you just got it all wrong. It's bearish, no matter how brutal this was, no matter the fact that we've been 4 bullish weeks in a row, it doesn't invalidate the 3 bearish weeks we had earlier. So at some point, try to be rational. We're still lower than the previous resistance. No matter how fucking hard we try to retrace to those prices, if we unfold that and if we reverse, it's still gonna break fucking supports. And I still tend to believe that this is nothing like a bullish reversal structure. This is just pullbacking structure, and we're probably gonna suffer and drop prices even faster the next time. So in that perspective, selling SPX is what I done over week. Doesn't mean I'll be right, it's just I don't fucking know, but I just remember the last time it was G20, I made the mistake. I needed to sell. I knew I had the plan to sell, but I just said, okay, we're gapping up, we're holding the gap. I'm going to just wait for a couple more days and a slightly higher prices to sell and apply the plan. Remember what it ended with? I got a stop loss in here because I tried to buy the market to fucking follow the short-term trends and trying to get higher. I got wrong-footed. I took losses instead of big gains, even though the initial plan was to fucking sell. So this time, I'm not going to do the same mistake. I'm selling because that's the fucking plan. I'm below resistance. I'm selling. Point. Now I'll see what the future is. I have the signals. I don't give a shit. I just manage my risk, putting my stop loss in here. If we go there, means we're ranging, and I'm going to get out, and I will get in again later. But I have to change the scenario. Right now, I picked I had to pick a choice. So I picked one. I selected bearish. If I'm wrong, it's going to be ranging, which means I'll probably have to take a tiny loss, but no more than that, and then I'll readjust to ranging. I'll just review the timings, but for now, I think we're just bearish, and I'll just follow through this plan. All right, the plan was to go 2 waves to the upside. Okay, so let's just be aside. This is what I was forecasting. So we've got 2 options right now. It's either plan A. Okay, let's put it in a different color. Let's use blue, okay? So let's say that it's red. So we got 2 options right now. We got the red scenario, the worst case scenario, the bearish one, the fast bearish one, which means we go bearish as fast as possible, and we're probably going to go really fastly bearish, okay? So let's just say, okay, these are the swings I have for the year ahead, the one we've been talking about, and to me, nothing has changed so far, okay? So let's just freaking put everything in there, so we're just doing the way I was thinking it will. Okay, so this is the point I think all scenarios will join, and this is where I think the big short is. But I think we might have a tiny bigger short, big short. Let's call the small short first, small short, and the big short is going to be there anyway. I still think we've got time before getting crazy bearish, but I still think that before going crazy bearish, we're going to have to fuck up the 2000 area. Remember when I said the 38% Fibonacci is and where we need to buy? I think we're going to go there. I just don't know what the actual timing will be. Either we go straight line starting from now, we reverse, we fuck everything up and we go there, or we make an ABC extended and a longer structure. Meaning, I don't know if this is ABC done already and we go there, or we have just done A point in which we're going to find B support and the heading C point slightly higher to just do the same thing afterwards. I don't know if the bear timing is just in the week ahead of us or just a few months ahead of us with 2 waves to the upside to go to. All right, that's the only uncertainty I have right now. But I think anyway in here is going to be a selling area. And if you just get it to the actual conclusion of today, why have I been selling? Because I think we might be having short-term support, or we can start searching and seeking supports in the yen starting now. We could go slightly lower, which means I've been selling in here. I don't know if this is the market top. We can still try to go a little bit higher than that. Still having some room in the yen, still having some room in the dollar, in the gold. Still having some range room in the bond market. So if you just figure this out, to me the answer is clearly simple. We don't know what the hell is going to happen simply because we've got some room to range. So the range could be beneficiary for the stock market, meaning that we could try to grind our way up a little bit further than we're currently done, or we just fuck it up, buy the yen, buy the gold, sell the bonds, and we're going to sell assets as well. But selling bonds, long-term bonds, I'm talking about a 10 years maturity. The short-term bonds, they're just going to keep straight line or flat line. They're not going to retrace. Okay? So short-term bond rising, long-term bonds falling with the stocks. What does that mean? Fucking yield curve reversal and shifting to bear trading. So I've been saying we'll do this pretty long ago. Okay, I knew this would come someday, and I think we're nearly about to do this. This is what I want to see. The market really shifting bearish with clear prices this time. Bond market and stock market bearish is the sign I want to be sure the market is capitulating. Whenever it will, what's going to happen? Everybody's going to freaking panic, going to tell you that we're bear market trading, that we're going to fall like a knife. What the fuck are you going to do? You buy that shit out. You buy it out at 38% Fibonacci, below 2100 in that price area. We're going to buy the fucking panic. All right? Doesn't say we're going to do that with higher leverage than ever and without signal, but we're going to buy this area. At least I will. If I have any fucking signal in here, I'll buy without questioning. Buy that. Low leverage because it's kind of trendy, and remember what I said earlier, I'm favoring the selling entries, so I'm going to basically, if I've got 3 coins to throw, I'll put 2 coins in bearish sides, 1 coin to the bullish side. So it's simple as that. I'm going to buy because it will be a buy timing, and I'm most likely just going to buy my selling entries first. So I'm going to buy myself out and probably just going to reverse that position with a tiny bullish positioning for a 2 waves retracement. Okay, because either way, either if we go red sign or blue sign, whenever we'll get there, I think we're going to have 2 waves reversal. Okay, exactly the same structure. The dead cat bounce when everything is red and everybody is going to sell for decent reasons, because this time we're going to have a reverse yield curve. We're going to have the death cross on every time frame. You're going to have monthly bearish support, bullish support broken down. We're going to have everything like that. This is when the market will have decent and actual elements to be switching bear market. And that's when we will switch bear market, that you're going to have to buy the shit out. Because guess what? As usual, people are going to do what they shouldn't be doing. Whenever we'll go bearish, they will panic sell, and you have to buy that shit out, because this is when we're going to have interesting prices. It's not because I like to go against the consensus, it's because trading the consensus is what you do when the trends are at play. This is what you do when we're 2012, 2013. This is the time you just follow the consensus without asking any fucking questions, because this is pure trending. Now you start questioning the consensus, and now that the consensus is freaking bullish when everything suggests we're going to be bearish, I just fucking trade against that. And that's simple as that. I think I'll have much more odds being right than wrong in here, because I may have a bearish bias in here that I will eventually apply a little bit too early, but I still tend to believe that it's obviously going to be a much better decision than having a bullish bias. Even though, as I said, right now, those who are less aggressive, so and mostly those of you guys who are learning to trade right now, who doesn't have enough experience, I strongly suggest you don't yet switch to bearish bias, but most likely trying to be balanced, not bullish, not bearish. You wait for the signals to confirm. It's just, regarding my past experience, that kind of market isn't going to range for a long time. It's just going to go switching bullish, bearish, and fuck up whoever is too late to get in. But doesn't mean you can catch up on this, but you'll have to take the breakdown trades. So, unexperienced trader, I suggest you just wait for the breakdown trades, and you're going to take them with very tiny leverage, but you're going to play the game anyway. But getting in here, trading aggressively below resistance, I think it's a professional matter, and really something that should be left for those who have enough experience to handle the psychology with it. It's going to require tight money management, strong psychology, and I bet most of you guys who are teaching trade or are learning at trading probably won't have those qualities. So instead of trying to fight stronger than you actually are, I suggest you just stand by, try to gather the dust, tiny gains, but still gains, and learn the lesson and live through this. How does a market long-term reversal plays its game? It's really what I would like you guys to do. So today's been a long show, yes, I know, but I had a lot of things to talk to you about. I really wanted you to be warned about what should be ahead, what could be ahead of us, and what are the potential and what are the odds. I need to. You can be damn sure that if I ever turn out to be wrong, and if this freaking trend has to reactivate itself and create new historical highs in 2019, you can be damn sure I'll be the first one to apologize, because I can still be wrong. As I said, I assess this to be a 5% odd, so really a narrow odd. I cannot neglige, it's not negligible at all. It doesn't mean I can go all in and I'll be sure to be right. It's just, there's still a possibility I could be wrong. So if you're thinking that the way I'm talking, the way I feel like convinced that we're going to go down, if that brings out to you the emotion saying, okay, the guys know what he's talking about, he feels pretty confident about the bearish side, so I'm going to go fully bearish because he just said so. I mean, fuck it. If you just do that, oh gosh, if you feel ruined, if you end up ruined, you really deserved it, because that's that's not how you're going to get yourself into trading. You just don't blindly follow someone because he says something. I'm saying this, but with a risk management. So if you want to blindly follow me, just at least follow the money management. All right. Anyway, all those warnings have now been said. You know what you have to do. Anyway, beginner, low leverage, and don't really try to be aggressive. It's going to be a professional stuff out here, and it's going to be dangerous if you don't have the mindset according to this. If you're experienced enough to wanting to try this, then welcome on board. I'm going to try that with you as well. Obviously, doesn't mean we're going to be right 100% chances. We're going to try something, we're going to try making money out of this market, and future will tell if we were right or fucking wrong. Bye guys, wish you a good week. Obviously the next week is going to be interesting. I think we may expect some bearish reversal either that week or 2 weeks from now. If it doesn't work out that week, then be really patient. Means that we're going to hold the weekly candle, the monthly candle closes, and probably delay the selling entries to later in February. But we're going to have plenty of times to talk about that. So for now, US is holiday today. I suggest you just stand by, take the holiday, wait for tomorrow and see how it goes. If we V-shape reversal, or if we try to get ourselves pushing prices slightly higher. Remember that what I said in the monthly chart, in a yearly chart perspective, this is the area I want to sell. But consider this as an area. Doesn't mean we can't go a little bit higher. We've got plenty of room to do so. So it doesn't mean that we already cleared the market top. Obviously, we don't know at that stage. We just need to have bearish daily engulfing structure. So if tomorrow the futures are opening below that low, this is really wrong for the market. It means that we'll obviously fuck it up, just like we've done last time. So yes, this market could be bullish, but any bearish reversal in here below resistance is going to be worst case scenario for the bulls. All right. And as usual, as I said, if you want to be balanced, look at support areas and know that you're going to buy below supports. And if you want to be neutral, then look at resistance and know that we're going to sell after breaking resistances. So if we're neutral, it's probably there that we're going to sell, and that's totally accepted in my money management. Okay, this is where we got the resistance. We can break through this, chase stop losses, and then reverse. That's the neutral stage. Probably the blue scenario will be at play if we do that. Okay, if we just try to break a little higher. Probably is going to trigger the range scenario, and in that perspective means we're going to have to be a lot more patient before heading into the 2000 area. If we just fade in here, I think that's probably the most bearish ones, because we'll just sell resistance once again, and that's the sign of a trend. If we're breaking through supports and holding resistances, god damn it, that's just what means a bearish trend. And that's simple as that. Okay, so wait for the confirmation, and if you're not experienced enough, just wait.